6th of June 2022. This is not financial advice, so I'm going to go over a few things. I recently posted a video about there was a distribution day following a follow-through day in both the NASDAQ and S&P 500. And NASDAQ that day was there. That volume's cut off. A few days later, I was feeling like a bit of an idiot. Like a lot of things moved. A lot of the beaten down tech stocks moved really strongly. I think, we're in a bit of no man's land now. I think there's because it's holding the 21-day moving average. So I literally don't know, but I do know that a distribution day following a follow-through day is not generally a good sign. So we'll just have to wait and see how it goes. Pretty much ditto the S&P 500. Distribution day there. I did note at the time, like the volume is huge, and I've got a few other days where that just happens. I'm not sure if there's something else that's going on there. But anyway, time being, it's again holding the 21-day moving average. So can it sort of hold and move on from here? I don't know. That same video, I also said there was distribution in some of the leading names, which is energy. So Baker Hughes was one of them. Distribution that day. I was thinking maybe there's a character change. To be fair, look, these energy stocks have actually held quite well. So we'll see how that all goes. There was a number of them that were in that space. I'm going to just go over this. Actually, let's just stick with the energy space for a moment. XOM, I've talked about this one previously as a trade that I was in. Sold it here like a bit of a clown. Key lesson, I noted this at the time, it's in my business plan, is got to manage my trades better. So that was 2x my risk. So the better thing to do would have been to sell half, raise the stops to break even, and then just let the rest run to see how it can go. That would have been like a nice little earner there. Same with Chevron, Warren Buffett one. He's been buying a lot of. Really ought to have been buying it. That sort of shakeout day down to the 50-day moving average. Traders would have been getting stopped out. Would have been sitting on a nice buffer there, or also if I'd bought it around here. Now, I've mentioned in a previous video, I don't think I need to get too fussy with it slightly above or below the 50-day moving average, which I'm really sort of going to try and work on. And in the same sector, Shell, it's given a few good opportunities to be buying on pullbacks now, and sort of pushed out just nicely. So there's a few trades that really should have been in. So I went back through my videos. It was only 2 months ago that I started talking about oil and gas. So at the beginning of June now, so May, April. I really should have been on my game a lot earlier and seen this trend happening. I was still obsessing over semiconductors, still sort of gibbering on about that. But I should have been running my scans, seeing what the strongest sectors and industries are, and that would have very clearly shown me things like shipping, agriculture, oil, gas, energy were the places to be. So very clear sort of trend up there, nice pullbacks to give you sort of nice entries. It could have been trading in and out, and this is such a mega cap stock. So things like ExxonMobil, Chevron, Shell, huge companies. I could have probably bought options really quite cheaply and played those sort of mega caps that way. A sector that I did say was looking a bit tired is ag, chemicals ag specifically. So stocks are sort of rolled over from the 50 and not recovered so far. So looking a bit tired doesn't mean it's out. That could be just a sort of healthy pullback. It's going through here. Don't have any exposure in this sector at the moment. And same with Mosaic. Pulled back to the 50, rallied back up, failed, rallied back up again, failed. So again, not really looking too strong right for the time being. Before I move on to my actual stocks, I want to talk about one more, which is Scorpio. This one's sort of borderline comical. The CEO is buying periodically quite large amounts of call options. And I was following sort of back here somewhere. He's actually losing money on his options. And this is a case where, again, should have been just a bit more on my game and continue to follow it. Very strong sector. This is shipping, I think, as I understand it, it's a shipping company for the oil and gas industry. So yeah, this should have just been on the radar. Very strong sector. Even though the guy was making some bad trades, he actually continued to make to be buying call options. So yeah, like I say, if I'd sort of just been more diligent, and this would have popped up easy on the scans, would have gave it an opportunity to buy back an upside reversal day there against a 21-day moving average against previous resistance. Nice one. Could have even probably had to go there, had to go either this day or this day. Maybe I would have had to use options because it was just before earnings. Again, pull back. Here's an upside reversal day. So this thing has doubled and given plenty of opportunities to trade in and out of. This could have been a year maker, this trade. So I do need a better job at running my scans. I've sort of become maybe a little bit obsessed with the 50-day moving average. I've got another scan that picks up stocks that are close to the 21-day moving average. I just need to make sure I run that as well. Because look at this. That's just perfect in the way that's traded. So, okay, let's go into the stocks I've got. I'm going to say straight up, I might have made a mistake in general. I've got 3 stocks and they're all in the utility space. Exelon, I've actually already taken half of my position out here because I've got just about 2x my risk. I'm letting the rest run now. It's having a pullback at the moment. Stock's at break even, so unless it gaps down, I'm going to make money on this trade. SRE, to tell you the truth, I've probably balls this one up. And I said in the previous video, I shouldn't just go and buy a stock just because it recovers to the 50-day moving average, because if it's had a few good days like it had here and I bought it here, then choppy markets being choppy markets, it could be just due for a pullback and I get shaken out. Now, it hasn't hit my stop yet. It's not looking too good at the moment. So yeah, gosh, I need to do a better job at I just get that little bit bullish after a few days, saying, okay, it's recovered the 50-day moving average. It's all good. No, it's not all good. It could have been just having a go just under here when I was looking at on the nose to other traders. Anyway, I've got in my notes, so just really be careful of just not chasing stocks. We'll see how this one goes, of course. So apart from that, quite a lot to like about this chart. Nice long base, stage, going into stage 1, moving into stage 2, first pullback to the 50. So hovering around here is great. If I get stopped out, I think I'll just try again if everything else sets up. So, and the other one is I went back into AEE. Did a better job with this one. Bought it here. So moved out nicely, pulled back to the 50-day moving average. Remember, I bought and got stopped out here because I ran the stop loss too tight. Pushed out, came back to the 50-day, and this is an upside reversal day right here. Pretty happy with that purchase. The only problem is all these utilities having a bit of a pullback, a small pullback at the moment, while other things like oil and gas and are flying along. So I think I've got too much in one sector, so we'll see how we go overnight. I might even sell one of these to buy an oil and gas if that's looking, if one of those is sort of setting up quite well. I'm not going to forget we have a little bit of a distribution in oil and gas, so they have had a big run. So I don't want to have sort of too much of a case of FOMO. They're going to be disciplined and buy, in pullback areas and hopefully areas where the sort of traders are sort of had a bit of a hissy fit and thrown it out.